Good afternoon. Today is Monday, July the 17th. The time right now in Singapore is 24 minutes past noon. And this is the start of another week. And of course, we knew what happened last week. The release of the US CPI numbers has caused a little bit of volatility in markets. And today, of course, we will see the continuation of that volatility going into this week. And this morning, we have the release of China GDP numbers. Actually, it wasn't fantastic. We can see that China's GDP is obviously on a downtrend. On a quarter-on-quarter basis, it has actually grown 0.4% on a year-on-year basis. Surprisingly, it's still at 6.3% compared to market expectation of 7.3%. So we can see China is definitely slowing down to the detriment for the rest of the world, and it will have impact. Now, today we're going to talk about beginning with the US equity markets. We can see that over the weekend itself, we can see last Friday, US equity wants to go higher. However, there is one particular major index that has not been following through, and that, of course, is the Dow Jones index. So we can see the Dow Jones actually attempt to rally, but it could not manage to go much higher beyond what we can see at 34,586.94, which was the last Friday, the week before, 2 Fridays ago's high. And we can see despite the encouraging numbers from the CPI numbers, Dow Jones did not went higher. In fact, it has failed to take out the June high at 34,588.68. So this is developing into a double top, as far as technicians will be able to tell you that this is definitely a potential reversal pattern. And if we do expect prices to come back down again, and this will be laying the groundwork for the week itself going forward. And if the market do retrace, I do expect market to come down to 33,400 to 33,600 within this bracket of prices earmarked here in the green zone here. So this is going to be potentially a move that may actually yield more than 1,000 points. So currently where it is right now, it is actually quite ideal for doing counter trend trade because the risk is actually very low. The year high so far is 34,712, and if price do not break above this level, the odds of a pullback is actually quite great. And in terms of risk reward ratio, this is quite an attractive zone to actually go counter trend, meaning to say I'll be more than happy to sell it. In fact, I have sold it in the S&P 500. My order to sell is pending in the market itself. I think the market may or may not be able to hit my limit price, but we will see as the market opens tonight. Over the S&P 500, we can see that S&P 500 has managed a new high for the year at what is this level here is at 4,527.7. So we can see that the price is marginally above within this bracket of prices, which I have always identified as an area of vulnerability. That is 4,512 to 4,537.3. And if the market do not break the 37.3, I think the market may have a good chance to come down. In fact, the risk of a counter trend is actually getting very, very attractive. And immediate bottom for me, the target will be a 4,329 levels. Okay, so look up for this horizontal line that I've drawn on my chart here. And in the Nasdaq 100, Nasdaq obviously will be taking the market by the horn. The market has basically been charging higher, and last week was no difference. The CPI numbers actually give the bulls another reason to go back into the market, and market traded to a high at 15,720.06, and this is a new high for the year. And interestingly, on a 4 hours time frame, you can see there's a very minor reversal pattern here. It may not amount to much, but again, we want to see how price will react tonight. In the meantime, if the market do charge higher, I have a target at 16,266 levels. So 2 ways it can happen: either the market continue to charge higher towards my target, or the market is back down on profit taking. And if it does, my immediate target will be 14,925 levels. We'll look out for this level as well. And over in Asia, we can see that the Nikkei is getting cautious. We have a rebound from 31,792 levels, and the highest it traded was 32,780. That was back on last Friday, and this morning market has been very, very cautious. Doesn't want to take the market either way in any sense. So we can see that if the market can stabilize, there is a possibility that it may go back and challenge the 33,760 levels one more time. And very much like the Nasdaq, we have seen a double top here, because the last time it went up here was on January the 3rd, and we can see that the market failed to take out the 33,773 levels. So this created another double top here, and prices has come down. But the way it come down is in a three-wave corrective pattern. So all I can say is that the market could be getting ready to rally one more time. But again, we will have to see how Wall Street react. If we have a significant pullback on Wall Street, then obviously this nascent potential rally that we may able to see in the Nikkei may not actually happen. Okay. Now, Hong Kong is closed today because of typhoon. There was a typhoon warning, and all the exchanges are closed for business today. But barring that, if the market does want to go higher, it does have the excuse right now, because the market took out the previous high here, which I have earmarked to be a barrier of higher to higher prices, and that level is 19,449. Okay, the market has taken up that high to as high as 19,534.8. And although it closed back down again, the market has already laid the foundation for the ability to go much higher. First to take out the 20,115 levels, and then potentially going back to the 21,000 levels. So again, these are potentials. We will have to see how market reacts as the market unfolds. And over in the mainland Shanghai index, we can see that this morning report in terms of the GDP is not definitely a good news, and you can see that the Shanghai Composite Index was on the way up, and then this morning it gaps down and been trading lower. Now it's trading just under 3,200 levels, and this is definitely quite damaging, because we can see from the statistics, whether it is import-export numbers that we saw last week. We also saw that the latest GDP numbers has been telling us the Chinese economy is definitely slowing down. So this is causing a little bit of heartaches. So if you are into Chinese equity, just be aware that the Chinese economy is currently right now in a potential deflationary phase, and that is something else very different from the rest of the world. Okay. And if you look at energy prices, we can see energy prices continue to slide back from a high of $77.30. And this does not damage the bullish outlook that I have mentioned for quite some time now. And the market is coming back right now to just under $75 per barrel from a high of $77.30 that we saw last Friday. And if the market continue to edge lower, I would love to see a three-wave pullback here, ideally targeting $72.15 to $73.40 level. So this level will be quite an attractive level, especially $72.64. I think this level should be able to hold. And if the market can stabilize around this area, it could be a launch pad for much higher prices, initially targeting the $80 per barrel. But I think the market has a lot more potential than that. So let's watch what happens. Okay. In the precious metal complex here, we can see that the gold has went up now $1,963 and almost 80 cents last Friday, and it has pulled back. So this pullback obviously has got a lot to do with the US dollar's potential reversal. Later on, when we talk about the dollar itself, we can see the dollar has fallen quite a fair bit last week. I think the market is probably only have a little bit more downside potential. After that, the risk is for a significant rebound. So if we do get a rebound, of course, the gold prices will have to come back down, and that is laying the stage for possibly the market going out to 1,940 to 1,948 levels. And if this level can hold, then another assault at $1,983 may be in the cut. So do watch out for this. But between the gold and silver, I would prefer to do the silver, because the silver has been a lot more aggressive. In fact, on a week-to-week basis, we can see that silver last week has gone up by 8% compared to gold rally of less than 1.4%, I think 1.48%. So we can see on the comparative basis, the odds is in silver. So if you have to choose between the two, I think if we do see a pullback in the silver prices, then I think the area to buy will be at $24 and $24.45. The high traded last Friday was $25.02. So if this market can stabilize around $24, I think there's a very good chance that we're going to see another move higher, perhaps initially to target $25.60 to $26. After that, we probably will see a more significant pullback. Then we will talk about it when that happens. Okay. In the meantime, I think I'm looking to buy here $24 to $24.45. Over the dollar, I mentioned earlier on, the dollar has basically been coming down, and it has actually steepened the decline here in such a manner that the market is talking about, is it the end of the dollar? But I don't think so. The dollar basically is reacting to the softer than expected CPI numbers that we saw last week, and this is giving the ideas to market participants that the Federal Reserve now will have the excuse to go easy. Okay, basically the Fed has already told us that there will be 2 more rate hikes from here until the end of the year. But with the CPI numbers obviously coming down, the headline CPI numbers is currently at 3%. So it's not that far away from 2% right now. So it's enough reason for the Federal Reserve to stop hiking interest rates. So that is the market participant view. However, the core inflation, which has been very stubborn above 5% for the last 4 to 5 months, has finally dipped below 5% to 4.8%. But this is still very, very far from 2%, which is the target rate. So again, another school of thought that maybe the Federal Reserve will look at the core numbers and decided that it's still not good enough. They may have more work cut out for them. So if this is the case, maybe there will be reasons to hike even further. So there are 2 camps of thought here. So depending which one will pan out here. So the market right now will be in the area of uncertainty. So if the dollar continue to slide, if the market believes the Federal Reserve has done enough, then obviously there will be no more rate hike, and no more rate hike means the dollar do not have the motivation to go much higher. So this is the rationale behind why the dollar is falling. And technically speaking, I do expect if we're going to see further decline in the dollar, target will probably be around 80, 90, 98 in the dollar index. Market may not even go that low. Okay, all we need to do is market to go down and test 99 first, and then if it cannot break, then market may be getting ready to rebound. And if we get a rebound, it could be quite sizable. So to be aware of the potential rebound here. So if you are not already sold, this is currently the lousy level to sell. So wait for the rebound if you are still thinking that the dollar may come down. Okay, so in the event the dollar do come down, we can still see a little bit more upside in the principal currency. The euro traded to a high of 112.45 over the weekend, and we can see that this bracket of prices at 112.10 to 113 even is my preferred market range of prices, in which I think it become very attractive to at least do a short-term counter trend trade, meaning to sell. And if that's the case, then maybe that is what will happen going into the early part of this week. Sterling is also in the same space as euro dollar right now. The market has gone up to 131.40 levels. It's also sitting comfortably between the area of prices, which I do consider to be vulnerable to the downside. That level is 130.70 to 131.85. And right now we are smack in between. Let's see whether this will actually pans out. I am of the view that the market may actually experience a little bit of a pullback here first. Okay. Over in Aussie, we can see that the Aussie picked up at just under 69 cents and it's pulling back. This morning, it went down to as low as 68 cents. And again, this is within the bracket of prices, which I think may invite some buyers coming in. The level is 0.6780 to 0.6825. And if the market do not go much lower, I think the market may be getting ready for another challenge, perhaps to the 70 cents level. 70 cents where it previously was the high here. So let's see whether 70 cents will be challenged this time around. Dollar Canadian is very much has a very much rebound. Now, when I talk about the dollar rebound in the dollar index, I do want to see something very similar to what we are seeing in the dollar index, although it has not already happened yet in the dollar index. So this is the risk of the rebound. So we can see dollar Canadian has actually went down to test just under the 1.31 to as low as 130.90, and the market has rebounded very aggressively. Currently it's trading at 132.30 levels, which is again this area is beginning to look attractive to sell. If those who have previously not sold, this area will be getting interesting to sell. So do watch out for this level to actually contain any further upside. This area is 132 to 132.75. to look out for potential here. And dollar yen has been a star performance last week. We can see that the dollar yen come down from 145 all the way to 137, and this is a massive drop in just 2 weeks. And we can see the market has basically decayed by something like what 800 pips. So Ripple market is a little bit overdone right now. So downside is going to be quite limited for now. Now the risk is a rebound. If we see a rebound back to 140 to 140 or one half area, I think that will be a much better area to sell, and the market is likely to come back down again. And this time it will take out 137 and then some. Okay, so if you are looking to sell the dollar yen, this area 140 20 to 140 160 will be a much better levels. Now, of course, the star performance last week is in the sector where we talk about the digital currencies. And we can see that the Bitcoin has gone up to 31,818 on the back of the judge ruling on the Ripple Lab case against the SEC, which is the Security Exchange Commission. And the judge ruled that whatever tokens that have been offered to the investing public in the States did not qualify as a breach against the US security law because the token are not categorized as security. However, the judge also ruled that those tokens that are sold to institutional investors, those are considered to be securities. So, but the market did not hear that. The market only hear that those tokens that are issued by Ripple, we're talking about the Ripple token itself to the public, does not constitute a breach of the security law. That alone caused the Ripple coin itself to rally almost 100%, although it has pulled back since. But that was the movement that caused Bitcoin to rally to 31,818. But it couldn't hang on. Almost immediately after the surge to 31,818, the market came back down to test the 30,000 levels. So we're currently seeing prices stuck at 30,300 levels, and maybe it will dip a little bit lower. And I suspect that this time it may go down to 29,400, marginally lower. Ideally, I want to see prices hanging around 28,700 to 29,400 levels to build a base before the market rally. This time, if it does rally, I do expect quite an explosive move. Okay. Now, just to give a reference, this is the Ripple coin. Now, Ripple coin, of course, have seen a massive rally that I mentioned earlier on the back of the SEC case against the Ripple Lab. So we can see the price actually went up to as high as just under the 75 95 cents level. The high is 93.37. Okay, and we see that there was quite a bit of a pullback, and this pullback saw prices go down to 67 cents, and it has stabilized around there, and it has since bounced back early in this morning, and we can see that the price may be getting ready to go much higher. So I think there's still a lot more upside potential in the Ripple coin. So if you are looking to buy, so maybe you've already missed out the best place to buy, because if it does come back again, anywhere between 62 to 66 cents will be a great level to buy. And I think the potential will be easily looking at a move towards 138, maybe to as high as $1.43. So this is where I think the market may be heading first. So in the meantime, this is all I have for you. You take care, and I'll come back to you tomorrow with another update. Bye-bye. Take care.